Imagine wiping $100 billion in stock value across global markets. This is something that is not common to hear. Yet one man did this, Bill Hwang. Not only did he do that, he also lost banks at least $10 billion. This is a man who was relatively unknown. He was known in Wall Street, but to the common person, this man was not known. Yet he caused all those losses. For a long time, he was seen as a genius, a Wall Street genius, because of the profits he was making, of the money he was making, of the success he had. He kept a low profile, and these losses happened through his family company, Archegos Capital Management. So this company, because it's family owned, it allowed him a lot of freedom. More freedom than was needed. Of course, freedom that caused damage. The thing is, running it as a family-owned company means that regulators are less on his neck. There are less, strict regulations on that. And probably that is why this amount of damage ended up happening. So Hwang began his career under Tiger Management, under the successful investor Julian Robertson. From then on, he founded his own hedge fund called Tiger Asia Management. And he was successful, and his hedge fund, even there was a time it managed up to $5 billion in assets. But eventually, charges were brought against him for insider trading. And he had to pay fines up to $44 million. The $44 million were funds that were paid by both the fund and Hwang. So eventually what happens is the hedge fund had to be shut down. And many people at this point would just throw in the towel. But Hwang was like, it's not over yet. So he decides to found his family office called Archegos Capital Management. And now this office won't be as regulated as a hedge fund would, because it's just a family office. This is where the problem began, obviously. Hwang was using something called return swaps. So in this sort of arrangement, what happens is that the banks are the ones who hold the positions, and all you do is collect the profits and the losses. So your name doesn't appear on the shareholders list. It's the banks that appear to own the shares. You don't appear to own the shares. All you do is collect the profits and the losses. So this is what led to which led to problems eventually, because when the losses started accruing, some banks had to, do the selling of the shares themselves and sustain some losses. And banks, Credit Suisse in particular, did not do this. It held on to them for too long, and it had substantial losses because of that. Some of the companies that he held stocks in, or rather the companies that he controlled shares in, were Tencent, Discovery, Viacom, CBS, and Baidu. Also, so is estimated there was a certain point where he controlled up to 10% of Viacom's shares. So because he held so much stock in Viacom, it affected him badly when Viacom decided to offer new stock shares. But now that made investors unsettled, and so the price fell by 10%. And because of this and how much shares Hwang was holding, it meant the banks came calling to him, asking for him to, add more money. And this ended up causing him so much tremendous losses, because now the banks started selling the shares, and then the shares continued to drop, and then more losses accrued, because the more you dump shares, it's like the prices drop, because now there's too much supply compared to demand. In addition to the fact that the investors had lost confidence in the shares as well. Eventually, Archegos lost $100 billion in exposure, and Hwang personally lost $20 billion. And Credit Suisse was really affected by this. It's estimated it lost around $5 billion. And in total, the banks are estimated to have lost around $10 billion. So this was catastrophic. This was horrible. This was bad, bad, bad. And right now, Hwang is facing possibly decades in prison because of this whole scenario. Maybe there should be more regulations for family offices, I think, because imagine wiping so much money from the economy, or from the global economy. That of course has an effect on thousands of people, most likely. That is something, that's a huge shock. It's a huge financial shock. So yeah, we need to, of course, have better regulations, or more needs to be done in regard to this, so that one individual doesn't cause all of this, all this losses. So eventually Archegos collapsed, and a lot of Credit Suisse executives resigned as well. And you know, one important thing to note about Hwang is that his faith was very, very, very important. And he often said he went with what he felt guided to do by his faith. So, you know, some people are using maths and graphs and all these calculations to do their trades, but this man was using his faith. And even has a church. He's a leader of a church, and he's a leader of a church charity, and that church charity has a huge endowment. So yeah, those are other factors. This is a unique scenario. You rarely hear people saying they're doing trades guided by faith. Yeah, so this, of course, we'll see how the story continues to go, and the aftermath, and what new regulations we will have as a result of this story. And if you like this video, like and subscribe. See you next time.